Good morning, good morning. Hola bafethu, Shayana mafleti, ladies ululate. Welcome to yet another one of our incredible webinars taking you through some insane data sets. Today we're covering understanding the money habits of Mzansi. So this is going to be a deep dive into the financial behaviors amongst South Africa's main markets. There's going to be some interesting, provocative conversations we're going to have, some interesting provocative data points that are going to be unveiled today. Joined with me today is our head of sales, Megan de Kock, as well as Shauna Abrahams, who heads up our research. In fact, she did a lot of the groundwork and her hands were dirty in this particular one. So I'm very excited to see what powerful insights she's going to unearth. My name is Donald Mokhale, and I'm the managing director of Moya app. And I will also be coordinating and moderating today's session. For those of you joining us online, do me a favor, please. Just introduce yourself in the comment section and say which company you're from. And then, of course, feel free to share comments and questions throughout the day or throughout the session. We will absolutely attend to it. Don't leave it until the end because usually there's too many questions to cover. So just continue to just flood us with questions and comments in between. We will incorporate them into the discussion. Very briefly, let's talk about today's agenda. So we're obviously going to get straight into the key findings, right, from the money habits of Mzansi, which Shauna will take you through. And then we're going to get into a panel discussion where we're going to do a little bit of a deeper dive into some of these really interesting nuggets. And then, of course, in between, like I mentioned, there'll be that Q&A, and then we'll do a closing remarks as well as next steps. Let's, I think, jump straight into it, Shauna. A little bit about Moya app, though. We are South Africa's leading data-free super app. We are a utility super app that enables main market consumers to communicate to each other data-free, which is a very powerful thing. And then secondly, what makes us a super app is that we aggregate and wrap 300 web apps in one environment and enable some of those to be data-free. Some of those are sponsored by you guys as brands. And then, of course, some of those are sponsored by us because we're trying to, from a social impact perspective, help Mzansi and make the mass market's lives just a little bit easier with some of our services. So in a nutshell, we've got this ecosystem of main market consumers who engage, buy, sell, and communicate with one another. And then we enable brands like yourselves to access them to drive acquisition and retention of customers. Over to
Thank you
Shauna.
so much. Yes, thank you so much, Donald, for the lovely introduction and a warm welcome to everyone online. I see you all there popping up. Thank you so much for your time, guys. So before just diving into the insights, let's start with some context. So for this session, we've pulled together insights from a mix of trusted sources to really understand the money habits in South Africa. So at the heart of it is Moyo App's research, which has voices of over 10,000 South Africans across the country. We've also laid in global perspective from Accenture as well as McKinsey, which gives us a sense of how issues like trust, demographics, and digital adoption play out worldwide. Closer to home, we've looked at the Standard Bank's Township Informal Economy Report to show true scale and resilience of township SMEs, and the Roger Wilco Township 6 report to understand how township consumers connect with brands and digital platforms. We also draw on Heberism's work on township economies and culture. And then lastly, the Mzansi Barometer 2025, we captures the broader financial pulse of South Africans. So bringing all of this together, let us tell a story that feels authentically South African, but also connected to bigger shifts in consumer behavior around the world. So with our research, we reached over 10,000 respondents, as I mentioned. These 10,000 respondents were across all 9 provinces, one of the most comprehensive views of South Africa's main market to date. The survey ran on Moyo App's landing page, and in under 3 weeks, without any invitations or incentives, people chose to take part because Moyo App is a data-free and participants didn't have to spend a cent on any data to complete. So opening the doors to voices often excluded by traditional online research. Most panelists were township or rural consumers, the very core of the main market. The study focused on 5 core areas of money habit, we how people earn, save, spend money, as well as how they feel about financial institutions and the brands. In this, its scale and inclusivity and authenticity. That makes this insight both robust, uniquely reflective of the real main market experience. South Africa's main market is not niche, it's the core country's economy. According to Stats SA, population estimates combined with the distribution of South Africans by settlement type estimate 49 million South Africans live in townships and or rural contexts. What makes this market so powerful is its consistency of spend. Month after month, their budgets are dedicated to essentials such as groceries, airtime and data, and education needs. These are not occasional purchases. They are non-negotiable, which makes them highly predictable for brands. The main market is the backbone of consumer activity in South Africa, and any brand that overlooks them is leaving an enormous opportunity on the table. So let's bring in some insights from the Standard Bank report to deepen some of our understanding. So Standard Bank estimates the township economy at over 900 billion rand annually, making it larger than many of the entire sectors of the formal economy. What's striking is the scale of participation. The economy doesn't just sustain households, it actively drives employment. In the sample, Standard Bank surveyed more than 7,500, and they found that 7,500 jobs were created by the township economy, showing the ripple effect these businesses have in their communities. Beyond the numbers, the report highlights how resilient township businesses are, opening in environments often marked by limited infrastructure, informal structures, and constant adversity, yet they still find ways to grow and thrive. So, when we talk about the township economy, we're talking about one of South Africa's most significant growth engines. It is deeply connected to livelihoods, youth opportunity, and future economic inclusion. For brands, ignoring this space is ignoring the majority of South Africans' consumers and entrepreneurs. So here is just a brief summary of what made up Moyo App's research. So firstly, it is a youthful market. Nearly 70% of the participants were under the age of 35, with the largest group being 25 to 34. That means that this market is in their prime earning, spending, and decision-making years. They are shaping household financial behavior and will continue to do so for decades. Second, we look at gender. The split is slightly skewed towards females, um, making up about 54% of it. And this really does matter because women are often the primary decision makers around household spending, especially on the foods, education, and the well-being of the household. On ethnicity, we see the majority is Black South Africans, with colored participants at 16%. Smaller portions are found across white, Asian, and other racial groups in South Africa. But this is a true reflection of the reality of South Africa's main market. And finally, location. Township and rural made up most of the study, with only 17% found in the urban area. And this is shows the real makeup of the study. So now, South African main market. So according to our study, South African main market operates under tough financial constraints. But what stands out most is the resilience and ingenuity. Rather than relying on a single income source, households weave together grants, side hustles, and informal trade to make ends meet. From the Moyo App Money Survey, 91% of our participants have bank accounts, which shows financial inclusion is incredibly strong. The gap is not the access, but the quality of engagement. 63% currently see banks as transactional and merely as a pass through for their money. For brands, this is a massive opportunity. If banks and businesses can go beyond these transactions and build relationship based on empathy, trust, and relevance, they unlock deeper loyalty and advocacy with their people.
From a behaviorism standpoint, I think the data source that often doesn't appear in these research spaces is the fact that blessers and blessees are also a source of income as well.
100% Donald. We don't forget that. That is very important in this as well. So, moving along then to another one where we leaned into the Standard Bank research, we see township businesses are more than the small operations. They are engines of resilience as well as growth. So, despite challenges, 6 in 10 report growth, which is a sign of their adaptability. So the gender dynamic is especially telling in the Standard Bank research. 64% of women start businesses out of necessity, often driven by unemployment, while men are more likely to start out of choice. This highlights how entrepreneurship serves at both as a survival strategy and an opportunity platform. What cuts across all is resilience. These businesses sustain livelihoods, create value, and anchor local economies. So when we look at spending, one thing really becomes clear, and I've mentioned it before, essentials dominate the household budget. Our research showed that 67% goes into groceries, 37% into airtime and data, 33% into school fees. These categories aren't occasional purchases. They are repeat, non-negotiable expenses that drive the rhythm of consumer life. This also means that the main market spending follows a very predictable pattern. So, payday weekends, think school terms, think everyday household routines. So, for brands, this is an insight that is quite critical. It tells us to resonate, campaigns must align with these cycles. So, whether a promotion lands just before payday or a back to school campaign that acknowledges the strain and priorities of parents. This is not impulse spending. It's deliberated, it's budgeted, and it's essential to how families manage their lives. And that's exactly where brands need to connect. Then, one of the most important factors influencing money habits in South Africa's main market is the family responsibility. Our research showed that 70% of people in this market are parents or caregivers. That means most financial decisions are made with dependents in mind. As a result, child related expenses dominate. So, going back again to groceries, school fees, healthcare, and increasingly data and airtime connectivity for education. This tells us that families, not individuals, drive the shape of spending decisions. It's not about one person's choice, it's about the well being of the whole household. So, for brands, the implication is clear. Messages must focus on care, education, and well being. Campaigns that acknowledge the role of parents and caregivers and show that your product supports families are far more likely to resonate deeply with the main markets. So, when it comes to savings, reality is most households operate informally. Cash at home and participation in stockpiles are most of the common vehicles for saving. The top savings goals are all about survival and stability. So, emergencies, groceries, school fees, and in some cases, starting small businesses. This shows us that saving is short term and survival driven, not long term wealth creation. But that doesn't mean there isn't opportunity. In fact, this opens the door for brands and financial services to step in with tools that are relevant to everyday realities: micro savings, goal based products, and community linked rewards. The big opportunity is helping consumers take the behavior they already have, so stock files and informal saving, and amplifying them into something more sustainable without breaking trust or increasing risk. So, stokvals are one of South Africa's greatest financial superpower, with over 11 million members pooling more than 50 billion rand every single year. So, stokvals are far more than just savings groups, they are financial ecosystems. The top uses for stokvals are essentials such as groceries, major life expenses, funerals, long term investments like in education. So for brands, stokvels represent a massive opportunity. By integrating through discounts, partnerships, and rewards, brands can earn trust and loyalty at scale. Imagine offering discounts, grocery discounts specifically, to stokvel groups or partnering on funeral or education plans. That's how you can embed your brand into financial lives of millions. And let's not forget, this is one of the largest informal financial system in the world. Globally, very few markets have such a strong community-led financial structure. For brands, ignoring stock files is ignoring one of the most powerful engines of spending and saving in the main markets.
You know, Shana, on Stockfells, I've seen very, very funny memes at the end of every year where people are talking about if I was the one who was the secretary of the finances for Stockfells, they speak about how stealing the money, you know, is an option where they disappear and they become uncontactable and the stress that
Mm.
that causes. As funny as that is, it made me think a little bit about imagine if insurance businesses had created an insurance product that actually ensures the actual Stockfell savings. Just a thought, as you were.
Gold, that is nugget. That is a golden nugget. Thank you, Donald. I mean, I hope some product designers are on this call so they can get that and carry that through for the businesses. I mean, it's going to be Stokefall time. So then moving along to one of the most important findings in our research is the trust gap between consumers and their banks. About 1 in 3 people feel misunderstood by their bank. Almost half say fees are too high, and many say physical distance from branches is still a challenge. So, globally, where digital personalization tools exist, only 3% of customers actually use them. Why is that? Because consumers don't feel they are designed for them. They want something more human, more empathetic, and more tailored. So this tells us what the main market wants is not just functionality. They want a connection, a human-like experience where they feel understood and shaped. So this is a clear opportunity for brands to win. So this is from Moyo App's research, and this chart basically shows us that there are two sides of consumer sentiment. On the left, we see banking preferences. Capitec dominates with more than half of the main market, showing how affordability and accessibility has driven adoption. Time Bank follows at 18%, while the Big Four unfortunately lag behind, the traditional legacy banks. On the right, we look at trust and understanding. When participants are asked if the bank understands them, the responses were polarized. While 36% feel strongly understood, nearly 1 in 3 um, rated the banks very low, with 18% giving the lowest possible score. This gap reveals a challenge and an opportunity. The main market is hungry for banks that don't just process transactions, but actually connect to the realities. The winners in this space will be those who balance affordability with human like understanding and empathy. Then leaning back into the Standard Bank report, and the Standard Bank report makes gaps in financial access very clear. Almost 80% of township businesses are unregistered, and this results in cutting them off from formal funding as well as growth opportunities. 61% are self funded, showing resilience but also real vulnerability. And 77% still use exercise books for bookkeeping, which limits their ability to work with banks or investors. This is when the opportunity lies. Financial services that are simple, affordable, and human. Because while technology and even AI can drive efficiency, it can never replace the human touch that builds trust. Consumers are also really hungry for financial education. If the sector can meet the need alongside microfunding and easy to use tools, it can unlock both growth and loyalty. So South Africans are embracing digital tools, but it's uniquely in a pragmatic way. On the other hand, they are digitally active, they are using apps, mobile wallets, and social media daily. On the other, they remain highly cost sensitive. And for many, cash is king. But remember, you cannot swipe or tap in a taxi. Not yet. Also, we're
Not yet,
seeing
at
that
least.
EF
Yeah.
not yet. So
Yeah.
also we are seeing that EFTs are in the townships are growing some traction, especially for people and businesses who want security, record keeping, and proof of payment. So this hybrid reality shows us that digital adoption is not about replacement. It's about complementing existing behaviors. The key lesson for brands is don't force a digital only approach. Success lies in building omni-channel strategies, blending security and the familiarity of cash with the convenience of mobile first digital tools. The duality is what will resonate most with South Africa's main markets. Now, how do brands actually build meaningful relationships? Sorry for that. Many brands stop merely at satisfaction, but satisfaction alone isn't enough to drive growth. Our research combined with Accenture's global findings show that true advocates, not just satisfied customers, are the growth multipliers. Advocates
Mm.
hold an average of 17% more products and they allocate about more than 30% more share of wallet to brands that they trust. So the difference is that loyalty built on convenience is fragile. This is what Accenture calls lazy loyalty. So let's just grab that again, is that loyalty built only on convenience or habit is a fragile way of building loyalty. But when a brand moves beyond function and build an emotional bond, consumers become advocates. Just think about it. I mean, if a brand has stood up for you and they've showed up for you, you start speaking to your friends. That's exactly how the main market operates as well, is they will show up consistently.
I can imagine the strategists on the call are clapping their hands because this has been something we've been telling all the marketing leads for a long time, that you have to always put money aside to spend on brand love, building brand love, telling stories, entertaining, and emotionally connecting with your audiences,
Mm.
so that in those times when they need to make a choice between you and your competitor, they remember that connection they have with you. It actually does make a difference, and I suppose. Uh, Case in point being this next slide you're about to get into.
It's the good news story.
100%.
Yeah.
100%. So, thanks, guys, for raising that. But also, very important that we need to mention this is because when people think of township dwellers, they think of the main market. They always think about everything is about cheap. But the main market, yes, they may be price sensitive, but these households carefully plan every single rand. But what's
Mm.
important to note is that price sensitivity doesn't always mean choosing the cheapest option, as I've mentioned. So when we look at Kantar's Mzansi Barometer 2025, using their meaningfully different model, South Africans are willing to pay more for brands perceived as meaningful, different, and of high quality. So, in fact, consumers spend on average 14% more on a trusted, high quality brand compared to low quality ones. This shows
Mm.
us while affordability is critical, consumers still reward value, trust, and quality with their
Mm.
wallets. The key takeaway is that brands that consistently deliver on quality and build trust will win because people are prepared to stretch their budgets when they believe the purchase is worth it.
Mhm.
I mean, I can think of myself in that one as well, not just the main market.
Mm.
So let's sum it all up on this one. So this slide captures the playbook for brands that wants to win in the main market. So firstly, be accessible. The audience thrives when you can easily reach and engage with the brand across multiple touch points. And when brands offer flexible payments that match irregular incomes as well. And then having the multiple touch points, as I've mentioned. Then the second one is be relevant. So brands that align with household priorities, such as brands that deliver food, education, or connectivity, become essential rather than optional. Look at Moyo app. That is the foundation of Moyo app. is we allowed connectivity, and therefore, I mean, Donald will maybe go into later how many daily app users we've got. Then thirdly is trust and being trustworthy. So transparency and simplicity matters deeply. Hidden costs erode loyalty first. And then finally, engagement and be educational. This market is community driven and values tangible, mobile first rewards. But it's not just about the rewards. Consumers also want brands to be educational. So helping them make better financial and business decisions. So brands that combine education as well as the brands that combine education with engagement builds the advocacy and the long-term loyalty among the main markets.
Mhm.
Fantastic. Thank you so much, Shauna. That was very riveting insights. I think there's so much to talk about. I'm actually frothing at the mouth because I've got so many questions to dig into. But before we do that, I do see Mongezi Mtati, a friend of ours, has dropped a question in the comment section. So Mongezi is saying here, somehow this is as a comment in response to the Stockfels data point. Mongezi says somehow the money ends up in banks and retail. Don't Stockfels erode their interest by not using the products available? And I think that's a very, very sharp question. And I think the answer is yes, they do absolutely erode that interest. And I think they haven't figured out a way to make Stockfels be a little bit more worthwhile from a financial standpoint. Yes, it's a great savings mechanism. And of course, they pull together with economies of scale. And I think that is where the opportunity is for both retail and banks themselves to be able to offer a much more worthwhile product. I suppose it's a provocation to the Stockfels construct themselves. How can they pull together in a way that's a lot more meaningful outside of it being a fantastic savings vehicle? How else can they, I suppose, grow their interest rates? That is a very culturally nuanced question, and I'd love to hear what the banks think about that. But that's a fantastic question. Thanks, Mongezi. I think let's jump straight into the main market economy then. Of course, Shana, over 49 million South Africans live in the townships, like you've highlighted, right? And the research is showing that youth is driving this financial flow as well. So, of course, it's not a niche, right? It's the backbone of consumer activity. But how do you think companies should reframe their view of this market?
So thank you so much for that question. I think I've shared this with many, is that I want the main market to be heard. I want their voices to be heard, because too often they're only seen as the low income. They don't have money, but they do have money. They are by heart and naturally hustlers. So when we look at the scale and the consistency of the spending across groceries, airtime, education, this is where the volume and the loyalty are built. So brands need to design for them and not around them. They are part of the economy.
I love that. There's Mongezi saying somebody should make him a Stockfeld treasurer. He wants to see something. That sounds dangerous. Megan, talk to me. Let's talk about the scale of township economy. So the stat quoted earlier in the data set is 900 billion. I saw Wendy Teal also commenting in the section around it. 900 billion annually, supporting millions, of livelihoods, right? So thousands and thousands of jobs. What does this tell us about opportunity?
Donald, I think the one thing, it's a massive amount, right? And I think a lot of people sit back and go, what? But the one thing I think is it definitely deserves focused strategy, right? The brands need to stop treating township markets as secondary, because it's such a powerhouse, and it's resilient even in adversity. So a focused strategy is the one thing that I would say would make a huge difference with regards to this township economy.
So not doing it as a by the way, not doing it as an afterthought, but
No,
a meticulously crafted approach focused on, I suppose, exactly the most amount of value against them. Hey,
100%. I think empathy is a big word here. That I would definitely throw in here as well. Is we need to understand this market left, right, and center.
I like that.
And I also think, Megan, sorry, Donald, just as stepping here, is we need to understand, but they also want to be heard. They also want to have to be seen. They are willing, like, I mean, I just mentioned in the research is that they're willing to pay for quality. So brands should stop only advertising to the elite, only advertising to
Mm.
people who have money. Because I mean, I can go back to a time when I was a student and I was probably broke, most likely broke. I had the latest brand because I hustled for that latest brand. I worked weekend jobs. I wore that brand. That is also the mindset of a township dweller in that instance.
But we've
So
seen this,
true.
guys. We saw this in the fast food webinar we had as well. Is value
Yeah.
trumps price, taste trumps
Mm.
price. They're
Mm.
willing to pay for this. You know, there's it's a two-prong approach for me. It's a brands need to understand people, and people need to understand the brand.
You know, that reminds me of a time when we were still Pantsulas growing up in the township, and the most elite shoe to get at the time was the Cavella, because obviously you had the All Stars and then you had the Cavella, and the Cavella was freaking expensive at the time. It was like 1,100 rand. And mind you, you're a student, you're in high school. There's no way you can afford a Cavella. So the thing that we did is we would save our lunch money every
Aye.
single week, and you eventually got to a place where you could afford like the monthly installment or lay-by fee. But the point, I suppose, is we value always trumps price sometimes, especially when you really want something and it's going to bring you a particular
Mm.
satisfaction. Township consumers, much like what I was growing up, it was a thing that we saved up for it. So you guys are absolutely spot on. Let's talk a little bit about township businesses now. The Standard Bank report says 60% of township businesses report growth despite the adversity. Shana, how should brands respond to this? Like, what exactly is the opportunity for them?
So I think there's a key opportunity here is, as I mentioned, is that by both of supporting, because remember I highlighted that females are doing this out of survival driven, and then males are doing this out of an opportunity. They are natural born entrepreneurs. That was found in the Standard Bank report. So we need to ensure, or brands need to ensure, that they are creating affordable tools that are accessible for all. Not just once you make R1 million or once you reach certain thresholds. That tools are available and those tools are easy to utilize. So think of whether you've got some microfunding options available, creating some bookkeeping solutions that are easy for non-accountants, for people that may not be so great with numbers, me included, and also maybe finding some stock discounts. So these are, because we need to remember these businesses are actually quite resilient. They want to grow, but sometimes they're lost. They don't know where to start. So we need to just ensure there's always accessibility to great products and easy to use products to facilitate the growth.
I like that. Megs, on
Yes.
spending priorities, Shauna highlighted a very interesting data point around how spending is deliberate and it's anchored in essentials. There's that whole cycle, right? It's groceries, it's airtime, it's education. And in there, of course, is taxi fare and maybe a little bit of spoils in there. And of course, there's a lot of that's usually not captured in research. So how can brands align to this? Like, how can brands make sure that they're part of that cycle? What is the opportunity for them?
There are many opportunities, but I think the first one that comes to mind for me, Donald, is knowing your customer, right? You have to understand your customer. You need to understand what's going on in their household and their cycles, right? So actually designing campaigns around those payday cycles, around those, the back to schools or the household milestones or the essentials. We really need to become better at understanding our clients. The banks have got this acronym KYC, know your customer, right? And
Yeah,
I feel that's
yeah.
really important. South Africa is a population that we cannot compare to any other country around the world because we're so diverse. What you have at the top is completely different to what you have at the 50% is completely different to what you have at 30% of the population. So really understanding the habits and studying those habits and having this ongoing conversation with your clients to see where they are and what they like in a product and what they don't like in a product and what new stuff, where the gaps are, and speaking towards that. I think that's really important. We need to start designing stuff around that market.
Yo, I love that. I see bars are being dropped in the comment section, and I'm going to read a few of them. Mongezi says, as they become younger, stock files are more tech savvy. It's a different one. Sorry, Kevin. The funds are higher and the purchases go as high as buying property. Perline says, besides understanding it, it also talks to creating with them in mind. We have to move beyond just understanding and start doing. I love that. And I think that's a very powerful provocation to particularly banks and the product owners on that side of things. And then, of course, let's talk about that the trust and the banking gap. So, Shauna, you highlighted a powerful stat here that says the majority of main market consumers have bank accounts. Of course, there's those that are unbanked, but the trust is very low. The fees are too high,
Yeah.
the banks are too far. Many feel misunderstood. So, what would you say is the actual way forward? How do you bridge this trust gap that exists?
Thanks for that one. So, I mean, as I mentioned, trust is absolutely the missing currency. So, I think what is important for banks is they need to, as I've mentioned, is create simple products that people understand. Be transparent. Don't, tell them that every swipe is going to cost them. Tell them where to go and draw cash. Not about, oh, just go to your local Pick and Pay, and then you get to the Pick and Pay, and Pick and Pay knows nothing about it. I mean, it's happened to me. So about being transparent and also lead with empathy. Be empathetic towards every single consumer. By knowing your consumer is understanding what their needs are, meeting them at that position where they are at the moment. And I feel these are key and pivotal to winning with and building trust. So people want banks that understand their realities. So, I mean, I know we don't want to drive the horn of Capitec, but Capitec has done this incredibly well, is because when I was on, I think, another webinar, it was mentioned by a Capitec candidate that was on the panel, is that Capitec hires, I mean, this is a key thing, is they hire people from the community. So therefore, when Ugogo walks in or Auntie walks in to that particular bank, they know how to communicate. So that is leading with empathy, understanding what your consumer wants. That's just a very simple example how it's worked for Capitec, and we saw 54% of our sample are banked with Capitec. So I mean that can't be by chance. But
No,
now I want,
absolutely.
yeah. And before we move on from the trust, I actually wanted to ask you something, Donald, about
Mhm.
some savings and stokvels. So savings often mean survival. So they say we find that main market saves cash at home, stokvels, and for small emergencies. And when
Yes.
stokvels alone pull 50 billion rand annually with over 11 million members, what does
Yeah.
this mean for financial services?
I think it means that it's debunking the whole notion that main market consumers don't save. There's always that, and I
Mm,
think we
mm,
we we have a one-dimensional lens of savings. We only look at savings accounts or bank accounts as the only method of
yes.
saving, but that's actually not true. There's also those shoe boxes. There's also those mattresses that have been bank accounts for years, right? And again, in
Yes,
part,
yes, yes.
because main market consumers have to catch taxis where they can't swipe, they have to use cash. So there has to be a stash of cash that they have to keep somewhere. So they absolutely save. They just save in very unconventional ways. To Perline's point, once you understand that, what are you doing about it? I suppose that's the provocation to the banks. And similarly, I think the opportunity for really driving consumer education, especially the stockfiles, the stockfile groups, they're starting to be more tech savvy, just like Mongezi has highlighted in the comment section, and rightfully so. But I suppose the opportunity for me is always what's in it for them? What's the incentive? Banks shouldn't be thinking about those audiences only as what can I get out of them from a market share and a profit perspective. They should be thinking about how can I build with them. And I think that is the opportunity for banks, is how can they co-create, as somebody has highlighted in the comment section as well, that's really where the opportunity is going to be. They save just in unconventional ways, but they don't trust you guys. So they want to withdraw their money as quickly as possible. That's why you highlight Capitec. They still have those massive queues. And Capitec, I made a joke at the Township CX report and said, imagine if I started an activations agency and I just stood at the Capitec ATMs at the end of every month. Imagine the amount of engagement that I would get, right? So that factor is a
100.
big thing, right? So they
Yes.
withdraw that money because they're afraid of the debit
Yeah.
orders. So it's time that banks really start
Yeah.
to understand these socio-economic and cultural realities that are happening. There is a
Mm,
hot topic happening, or a hot conversation happening in the comment section, that I think would
I see
be
it.
remiss of us if we don't highlight it. So let's start with Candice Goodman. Candice Goodman says,
Mm.
if I remember correctly from other research studies, there was a big mention of spending on betting / gambling and big income on betting too. Did you see this in your Mzansi money habits? And a similar question there from Danielle Horsen. She says, is there any data regarding gambling spend? I know there has been a rise in conversation about this. So beyond the necessary spend, as highlighted earlier, how much income is going to things like gambling, and how is that impacting long-term financial growth? Now, before we tackle the answer to this one, I know that in the Behaviours report, we picked up that data around gambling becoming the new side hustle, right? Some people are calling it a new pandemic, but it's becoming a new side hustle. And one of the challenges that I pose to banks is this. There are a number of various products that are starting to reward users in cash, but not in bank accounts, but in vouchers. So in voucher systems like One Voucher, Blue Voucher, these are redemption methods that are happening outside of the banking rails, which means that money doesn't actually go into any savings account. And then what we've seen, of course, through the Moya app research is that One Voucher gets reinvested in betting and gambling and online sports betting, right? And they do that as a way to hustle to multiply their earnings. So there's a significant amount of money that's going towards sports betting as a hustle. So part of that that slide that Shana showed, which has grants, I forgot the other one, and then there was
Side
side hustles.
hustles. Yeah.
Was it the informal
So
businesses, right?
yes, it was informal. Just yeah.
So part of that cycle, Danielle and Candice, is that side hustles, sports betting falls under that. I don't have a specific a detailed point, but please drop us an email so we can share with you, because we did do a sports betting, what we call a dipstick Moya quiz that we did at the beginning of the year that shows where that is leading. So yeah, we're happy to email you the exact numbers there. But certainly it picked up in the Mzansi report as the mass market are considering sports betting, and they're not seeing it as gambling, by the way. They're seeing it as sports betting because they're seeing it as a skills-based thing, because they know soccer. They follow soccer like a religion, as you know. They watch Chiefs, Pirates, and Sundowns games. You will know how hectic and super cultural it is. But essentially, they view it as a side hustle. So there's quite a significant number of people are starting to use sports betting as a way to generate and multiply their earnings. Okay,
And
I
apart
think
from
that's
that, it
go for it.
sorry, Donald, I just wanted to also add on is that through our research, we've also seen that when panelists and participants are completing surveys for us, they take the money that we reward them, as Donald just mentioned, and they take it into betting. So is this a negative thing? I don't necessarily think so. I actually think it is, they have to make this money work for them. They need to think about how can they multiply this money? How can they grow the money? So I think this is an opportunity for banks to show up.
Exactly.
Instead of our people going towards betting, why don't we make the stock files more rewarding for them? Why don't we create better tools that they can grow money instead of only thinking about long-term wealth creation? So I think there's that opportunity for the banks to exist. Donald, I wanted to ask one more thing to you, is about, because you just mentioned it, and I think
Yeah.
is what we found in the report is cash is still king. I mean,
Yeah.
but EFTs are rising. How do you think brands need to navigate this?
Oh man, see, this one is a super interesting one, because as we mentioned it a little bit earlier on, is part of the reason why cash is king is because they need cash to buy at this puzzle shop. They need cash to catch the taxi to go to work, and I think from a banking perspective, I think by just blending both omni-channel strategies while respecting that cash is king, but enabling it digitally in multiple ways, right? So at the moment, the way that the banks are thinking about digital, let's call it integration into the mass market's lives, is download the app, which of course is a great start. But then what else? What else can I do outside of downloading the app? And obviously the data is starting to show that people are looking for banking products and integration opportunities through chatting channels like a WhatsApp or even a Moya app, or or social media. But I think that's really the opportunity, is how do you start as a bank to be innovative in bridging the digital and the physical worlds together. And I think that omni-channel approach is really where the opportunity lies. Obviously, don't have all the answers in terms of what that looks like, but I think that's the direction that banks ought to be looking to really start to create for the banks. I love your provocation around, from a savings product perspective, what savings product can you as a bank create that will make them view you as a side hustle as well, where they can actually earn more money banking and or partnering with you as a bank. So similarly, from a EFT/digital perspective, I think it's about thinking about how do you bridge the digital and the physical world for the mass market in a way that's meaningful for them and their everyday realities. I think that's going to be a really, really powerful opportunity. Megan, I do have a quick question for you.
I just want to comment on that, can I? Because the underlying theme for me that comes through with all of this discussion and what we're talking about and the questions that we're answering and everything is our users have a huge need for consumer financial education. We've heard it, we've seen it, we get asked this constantly. And whether that is needing to understand the product better, needing to understand not necessarily how to save, how to invest, all of that, but really understanding a banking product better. Why should I download this app? What is in it for me? What does it give me in the sense? What is not necessarily an incentive, but how is this making my life better and easier, right? With Moya app, we try and bridge those two gaps, right? The data cost barrier and obviously the storage barrier. And that's what I'm saying with products as well, is what is in this for me? How would this enrich my life? And I think that message needs to come across a little bit more good news stories, feel good stories, stories being sent around digitally, showing empathy and making the users understand that this bank or this institution understands my situation. And that's where the educational element comes in. Banks, gambling, a lot of stuff, it's really education.
Absolutely.
And I mean,
go for it, Shana.
I just wanted to add, Megan, I think Mongizi also agrees with you on this one, is it's time for brands to understand people instead of seeking to be understood. So that is what Megan it's just summed up what Megan has said, is brands really need to start understanding what people need and want in banking and in every single sector. It's not just also about banking in this instance.
I'm loving the conversation because it's finally starting to demonstrate that the consumers and the world are changing, and that traditional instruments and traditional ways of doing things is actually no longer seeming to be fit for purpose anymore. And speaking thus, then, Megan, a question for you is, since we know that a lot of the side hustle culture is growing and continues to grow, partly because of unemployment and partly because it's an opportunity to really create wealth and or to be able to put food on the table for the main market consumers. The stat in the Standard Bank report says that 80% of businesses remain unregistered, right? 61% of those self-funded. 77% of those still use manual bookkeeping stuff. Like they're still recording stuff. What does this mean for brands? Like how can they really, I suppose, evolve this in a way that's both meaningful to the consumer and obviously drives business growth?
I think the stat is really important, and again, it comes back to that financial education. But I think it's an untapped segment that really needs simple, affordable solutions, right? So that KISS thing, keep it simple, stupid. That's exactly what we need to do here. Whether it's mobile-based bookkeeping or flexible loan products, the gap is massive. And that's where that comes in. It's the education, it's the understanding your customer, it's knowing how to explain something to them in a simple manner for these percentages to start shifting. It's not all going to shift overnight. We need to get a foot in the door, and we need to move the needle slightly until we get to where we want to be.
Megan, to be a little bit vulnerable, I was raised by a township tuck shop, actually, specifically. Spaza shop was kind of where I learned how to hustle. Okay, so I remember my father at the time, he was working for Spar, and he was a floor manager. So he would be the guy that does the stock, and he would estimate based on how much products were moving, how much stock they need to purchase again, and so on and so forth. And he would manage that. So he would apply that same knowledge to us in terms of like how much stock he needs to buy of Raja, of all the local stuff that we knew people would want to buy all the time. Now, what was interesting, I think, at the time was he was recording a lot of these transactions in an A4 book, man. He was using pen and paper, and he was recording it sometimes in his mind, and he would freestyle his way through it. Now, I imagine if there was, kind of proper tools at the time launched for businesses like his, which are very informal, but actually, I mean, they got me through high school and varsity, goddammit.
Yeah.
So it's meaningful, it's there, it's real, it's tangible. But it seems as though that lack of understanding from businesses, into this social cultural reality of township consumers is still a big gap. There's still not enough tools being created, let alone education on how they can kind of more structure their business a little bit better. What are your thoughts on that?
You know what, Donald? You obviously grew up in a township. I didn't, but there's not so much a bigger difference in how your father grew up and how my father grew up, right? Now I'm talking about the keeping a manual entry of every single transaction. I mean,
I'm giggling because I've got a similar story. I didn't grow.
In these cupboards behind me, there are A4 hardcover books with every single transaction that gets done every month. And till the day he passed away, that was he would do that religiously, and you couldn't get. But what I'm trying to say is, even that, the simple way of doing it, the simple way of teaching the older folk or the younger folk in townships right now to do it in a different way, making those products simpler, better to understand, and then bringing in, we spoke about this earlier in this webinar, the human element seems to not be there anymore. And I think that's a massive gap, is when someone goes to a bank and they stand there and it's just so hard to actually speak to someone. When you throw a bot in front of them or an online system in front of them that they're not familiar with, it's easy for everyone to throw up the towel and say, you know what, I'm just going to keep doing what I'm doing. So that's what I mean, the gap, and just keeping it simple, 100%. And some people,
and a lot of these consumers,
they
don't understand what you mean by 5% interest rate, because you're not educating them. They don't understand the tangible impact of what that really means, isn't it?
And it seems simple to us, right? Because we grew up with technology, and we grew up with this kind of stuff and schooling and all of that. But there's definitely a gap in the market on that simple stuff, that it's like the foundation that you need to lay down first. And once that foundation is laid down, we can build from there. And I think that needs to be reiterated a little bit.
I like that. I just want to read a quick comment from the section there. I see Kishana Naidu has said something interesting here. She says, if brands want to thrive in township economies and with consumers in general, they need to invest in the currency of trust and real relationship building. And then, of course, she's ending it off with a compliment. Thank you, Kishana. We appreciate that. Danielle Hussen is also saying some punchy things here. I wonder if consumers are really changing, or if it's just becoming too loud for brands to ignore any longer. That's a great provocation. And then she says, especially because newer brands are emerging that are finally listening, and the more traditional brands are falling behind. And I think that's exactly the punchline right there.
Yeah. And I think this is where I wanted to wrap up this section between us is, Donald, with your strategist hat on, you will always tell me, Shauna, I'm a strategist, I'm a born strategist. What do the lagging brands do in this instance? What is, because like Daniel's just mentioned, is the brands that are emerging are listening to consumers. The old school brands, the traditional brands are falling behind. What, as a strategist, would you suggest?
Oh my goodness! I think it's the argument I make even in the book, right? So shameless plug, you guys. Shameless plug. Introducing behaviorism. So in here, the argument we make is really that businesses ought to be culturally nuanced. If you understand your consumers' everyday reality, which is that empathy punchline you're making, Megan, and you, Shauna, is if you understand that reality and you start to develop and create products and services that are aligned to that everyday reality, you're much more likely to succeed, even without the marketing, long before the marketing, right? Because a lot of the things that have went really, again, Capitec's success is a Capitec won because they understood that the banking hours were prohibitive. They just understood that. They said, hey, these guys are tired of queuing. Also because once they shut down, they shut down. Then taxis ran out, so they opened up for longer hours. What did that do? Market share movement. They said banking fees are too expensive. Let's reduce them because these guys need to be able to understand. In fact, will cost you cheaper to withdraw from our ATMs versus another ATM, but we'll still charge you less than the other banks to withdraw at their ATMs. All of those things is really just listening and responding with products that are really, speaking to those realities. So I think that really ultimately is a final kind of strategic thing for businesses to do, banks and financial institutions alike. It's listen and understand what the actual reality is and start producing and creating products and services that are in line with that. The last point, of course, is drive consumer financial education. This is actually going to help the sector at large, not just any individual bank. If all banks are consistently teaching people about savings, investments, interest rates, what those mean, but in ways that are understandable to them. Because remember, I'm withdrawing cash every day because I don't want these debit orders, these fraud things. I don't trust you. So your consumer financial education content needs to speak to this reality. You can't just be speaking at higher grade English around savings and investments when I don't even understand how even banks work, how savings accounts even work. So there's that foundational work that needs to be done as well, alongside the creation of products and services that are culturally nuanced. That is what I would say banks ought to be doing in order to really get the best value for their money.
Thank you so much, Donald, for wrapping that up. That is such a valuable point. And thank you, everyone, for the questions and the engagement. It's been incredible. I'm just going to hand over to my colleague, Megan, to just wrap it up for us.
Okay. Thanks, guys. I really enjoyed that conversation. So I think where I'm going to come in for the last few minutes is just to tell you guys a little bit more about how we got this research and our panel. So Moya app is a platform where we actually have over 550,000 panelists that have opted into doing research and surveys with us. It's end-to-end research solutions. There's interactive Moya quiz, which is more dipstick insights. We can do targeted survey distribution, and then over and above all of that, deep bespoke data insights. So whether it's qualitative or quantitative, we can do it all digitally, which to me is profound. These are the two webinars that we've done so far, with many more to come. We did Feeding the Nation a few weeks ago, the fast food habits in South Africa's main market, and then today, the Understanding the Money Habits of Mzansi. Right, so just a quick one, and this just tells us a little bit more about Moya app and how Moya app has become a tool for businesses to, reach the main market consumers, the 4.5 million monthly active users that we have through our Discover session, our business API, the research part, which is the quiz, and then also our reward section. And we do this with clients. We can do this with engaging clients, and then we've got video ads, we've got static ads, messaging, just like there's very high impact, very high reach, and huge awareness of these ads. There we go.
And that, ladies and gentlemen, brings us to a close. Indeed, yeah, this was a very riveting session. I don't think we've had this much, high coffee, high caffeinated session like before. It's because of our passion, I suppose, for the main market consumers, and really just helping businesses to do a little bit better. Because ultimately, we have a vested interest in their success, because that holds the economy, that protects all of us at the end of the day. So I'm excited. I think this was a great session. And I hope you viewers at home online enjoyed the conversation and the insights. Obviously, the email addresses for those who might want the report. If you want the report, please email Megan and Shauna so they can email you the report. But thank you for your interaction, for your punchlines and bars in the comment section. Thank you, Mongezi. This was very riveting. We can't wait for the next one. Obviously, follow us on LinkedIn to keep tabs with what the next report is going to be about. We go vertical by vertical and obviously talk about the main market consumers' habits, thoughts, feelings, and influences of that particular vertical. We're excited for the next one. See you at the next one. And thank you so much. Have a great day further.
Thank you, everyone.
Take care.
Shauna.
Boo, 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 boo.